Remember that the following content is just a summary of information available on the internet, generated by AI. Investing decisions carry risks. What's next for uranium? Is the bull market still on track? The uranium market is currently in a holding pattern despite predictions of a massive bull run. Here's an analysis of the current situation and potential future scenarios. Current status: consolidation instead of growth. Uranium prices. The spot price of uranium is hovering around $75 per pound, with little volatility in recent months. Expectations: analysts previously projected prices in the $90 to $100 per pound range by 2025, which has yet to materialize. Contract trends. Long-term contracts are being signed at higher prices, signaling optimism among producers and utilities. Key factors influencing uranium. Demand. Nuclear renaissance. Countries like China, India, and Japan are ramping up investments in nuclear energy. EU and US. The push for low-emission energy sources supports nuclear as a stable option. Post-pandemic recovery. Reactor construction projects are resuming, but delays persist in major developments. Supply. Production. Top producers like Cameco and Kazatomprom are controlling supply to maintain higher prices. Kazatomprom. Stable output, but geopolitical risks linked to Central Asia remain. Cameco. Challenges include restarting mines that were shut during the pandemic. Recycled uranium. Interest in recycling spent nuclear fuel is growing, potentially reducing demand for fresh uranium. Geopolitics. Global tensions. Uncertainty surrounding Russia and Kazakhstan, key suppliers of enriched uranium. Strategic reserves. The US and EU are considering building strategic uranium reserves, which could spark a short-term price rally. Financial investors. ETFs and SBUT. Interest in uranium-focused funds is rising, but significant capital inflows are lacking. Speculation. Hedge funds are reducing positions due to higher interest rates and decreased liquidity. Why aren't uranium prices rising? Policy uncertainty. Large-scale nuclear programs are still in the planning phase, not translating into immediate purchases. Mutat investor sentiment. Current prices are seen as fair value, limiting speculative buying. Logistical issues. Challenges with transport and enrichment reduce real spot market demand. Competition. Renewable energy advancements continue to rival nuclear power in energy policies. Forecast for the coming months. Bullish scenario. Government action. Concrete purchases for strategic reserves by the US and EU. Institutional investment. Increased inflows into ETFs and SBUT. Geopolitical tension. Escalating Russia-West tensions could trigger panic buying. Bearish scenario. Delays in nuclear projects in China and India. Oversupply. Faster than expected production increases by Kazatomprom and Cameco. Alternatives. Accelerated development of renewable energy technologies. Conclusion. Is the bull market still coming? The uranium market is a long-term game. Short-term. Prices are likely to consolidate in the $70 to $80 per pound range. Medium-term. The realization of nuclear programs and government actions could spur growth in 2025. Long-term. The increasing number of reactors worldwide and a shift away from coal point to sustained gains. The uranium bull market may be delayed, but the fundamentals remain strong. Investors should stay patient while keeping an eye on long-term potential. We invite you to subscribe to our channel for easier access to future analyses. Please like the video to help us understand your needs better. If you want us to prepare a similar short report on another company, write its name in the comments. We do not engage in brokerage activities consisting of investment advice, portfolio management including one or more financial instruments, or preparing recommendations regarding transactions in financial instruments, or any other brokerage activities specified in the Act on Trading in Financial Instruments. Journal of Laws, 2005, number 183, item 1538. In accordance with Regulation EU, Number 596/2014 of the European Parliament and of the Council of April 16, 2014 on market abuse and the Commission Delegated Regulation, EU. 2016/958 of March 9, 2016 Supplementing Regulation EU. Number 596/2014 of the European Parliament and of the Council with regard to regulatory technical standards for the technical means for objective presentation of investment recommendations or other information recommending or suggesting an investment strategy and disclosure of particular interests or indications of conflicts of interest. The information provided in this recording is a compilation developed based on data and content collected from various internet sources, which are not always fully verified by us. They are for educational purposes and as part of an experiment on AI capabilities. When making investment decisions, the user should rely on their own judgment. Transactions conducted by the user are considered their own independent decisions.